Okay, welcome everybody to this evening's XAUUSD webinar, live Forex market review. My name is Duncan Cooper. Before we move along, if you can read through the disclaimer. For those on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar. I've given you the link there. For those in the webinar, if you can read through the disclaimer. Any questions to the webinar chat box or Q&A box, I've got both open. So I'll just give you a few moments to read through that disclaimer. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at XAUUSD and trade the Forex market full-time. Been trading it now for almost 20 years, been mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with the website, acy.com, go to the market news tab, or our YouTube channel at ACY Australia. Or if you want to connect with me personally, you'll find all my handles, all my links at my Linktree page there. If you want to get access to my chart layouts and templates, then contact Nathan.bray. They're all for MT4, the ones I'm using in the webinar. His email is down the bottom of the screen, but I'll put that in the chat for you now. All right, there we go. All right, so this is how I got the news. So the market this week's been very much affected by the news. It went down on Monday because of positive US dollar news, and then yesterday it went drastically back up the other way after data release. So we also have further data releases today. So we have further today unemployment claims figures. That might give us an insight into the job figures coming out tomorrow at 10:30 p.m. These are my time, Queensland time. So, late, where are we? We had the ISM manufacturing PMI that drove the market down. And then we had the ISM service PMI data from the US, which has driven the market back up. That's pairs, when I'm talking back up, that's pairs to the US dollar. So it's been difficult. Market's been definitely affected by news items. Pairs to the US dollar in general terms were in a downtrend. And the news just drove it further down on late Monday, Tuesday. But then we've had a bit of a reversal now. Whether or not that's just going to be kind of a rally, and then as the job figures come in, we swing back the other way. We'll have to wait and see. So let's get to the charts now. We'll start with the dollar index. Now, Tuesday I was discussing this, anticipating we're going to be maybe moving above this high with this weekly uptrend, higher top, higher bottom. But you can see the weekly candle here at the moment. It's looking rather negative. It may not be negative by the end of the week because we have the job figures coming out tomorrow, but it's not making life easy as a trader in the market at the moment. If you're trying to come up with a week by week play about where price is going, at the moment it's maybe hinting we are reversing. So we'll have to wait and see what the market brings us tomorrow on the news front. Of the big swings on the day chart here, there's a big, get my drawing tool with the fib. There's a minor low here, but this is much more of a significant low to high. So we may see a dip down to the 62.79% area of that range. We'll have to wait and see. It'd be nice if it started to reverse back up, because then it's back in with the dominant trend, and we can maybe get a bit more comfortable about it's just maybe a big one-day reaction yesterday. We'll have to wait and see. All right. S&P 500 has put in a lower bottom here on the day chart, but could, move to the weekly chart. The fact we're having a week down, we're actually having a week up and a week down at the moment. Much like we're having some of the pairs, we had a week down at the start of the week, and now we're having a week up. So it's all reacting to the news. Long-term trend here is up. I much prefer this to maybe have a healthy pullback, if it could, because it is very high up. It's all-time highs almost, but Bit difficult to get long at the moment because we've just moved to a lower bottom. So with the high time frame trends most definitely up, personally, I'd just like this to pull back down the range a bit more. So from the weekly chart perspective, I said this the other day, I had a range here and then a very minor kind of 1 week pullback. And then we have a very similar range now, almost at similar length, not quite similar length, but maybe it's very similar in terms of weeks. It's 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks there. So it's getting longer, but getting longer in time, not as long in price. But maybe it does need, maybe 1 or 2 weeks pullback before thinking about, can I look for my setup to get long? But once the job figures is finished on Friday, we'll may then have a determining factor about which way this wants to go. Fred Powell did talk yesterday, and all he said was cutting interest rates is data dependent. Didn't shed any more light than maybe saying last FOMC that they're going to cut rates in June. All I can kind of see from what he said yesterday wasn't really hinting at June. He was just saying it's data dependent. Until the data determines it, then they're probably not cutting. So I don't know whether we are going to get a cut in June or not. But in any event, this S&P 500 is just looking a little bit mixed on the day chart. We have a higher top and we have a lower bottom. So are we going to come up maybe for a slight turnaround to the downside? You could monitor that. Maybe we'll get a little for our chart. This could be a left shoulder, head. If you're thinking of getting short because we've moved to a lower bottom, then, looking for a rally back up to the 79% level at 52.61, opposite that left side here. If that is if you're prepared to go short. I mean, overall, we're in a blazing bull market on the weekly chart, but maybe a little bit of a downtrend forming on the day chart and into the 4-hour chart there. So I think it'd just be a much wiser move would be to just going to draw this fib down to the last month's low here. That's the current high. You just monitor the range of last month up to the new high. And can we come down into maybe the 62, 79% zone, which is here? And then do we find some support within the range of last month? And then do we turn around and you then look to be a buyer at a lower level within the overall trend that we're seeing? All right. Let's get into the currency pairs now. The euro dollar. This is last week's high. This is my 4-hour chart. This is why I've got my 4-hour chart up for me here. This is last week's high. I've drawn a fib down to the fresh low of this week. And we're coming up all the way up to try to test last week's high. You can see here we're just getting some selling pressure on the current 4-hour candle ahead of last week's high. So maybe we can't have a week up. Maybe this move up here is a little bit like the one we had up here. And then it exhausts and then moves down. So I was monitoring early in the day this 79% level. I did obviously push up. But if we can't move above last week's high, by the end of the week, we could be back down in this area here. So it is worth monitoring at the moment. Last week's high, 108.63. A little bit short at the moment. On the next 4-hour candle, if we significantly just trade all the way back down, correct railroad tracks here, then maybe we are topping out today up at close to last week's high, and we could then see it move back down the range. So I'm a little bit on the fence at the moment. We do have some more news coming out later in the day. So, it's very high up here to be a buyer at the moment. Even if we are changing trend, you probably want to wait for some form of pullback. We also have quite a large imbalance here formed yesterday. So as you know from my commentary, if you were with me yesterday, I was talking about imbalances getting filled. I discussed this one over here. We came down, rushed up and filled it, and then we turned around. So yes, we've been moving up, but we may well come back and fill this whole imbalance over the next 2, 3, 4 trading days. So I would be looking up here for a reversal if it starts to present because of that imbalance there. So I might just leave that there. 15-minute chart at the moment is still in an uptrend. You could look for a simple trend line break here if you're prepared to short the uptrend that we're seeing at the moment at such high level. It's just trying to maybe break the trend line at the moment, or you can be waiting for the news event to pass later in the day, or you could be and then see whether we retest this high level or not. I think with such a strong uptrend being shown from yesterday's news, it would be nice to see some kind of 4-hour negativity shown, like some kind of candlestick pattern to show rejection up here in the short term, before then maybe looking for the opportunity to get short intraday as price turns around. So the new candle for the 4-hour charts is starting now at my 7 o'clock. So it doesn't finish till 11 o'clock. So as we are getting into the New York session, what is the 4-hour chart telling you? Is it starting to tell you we're getting a reversal or not? All right, now another range that you could be monitoring as we got the job figures tomorrow, we could still move a lot higher. There's a range here. Right, I'd probably be monitoring the whole range of last month. That's last month's high down to the current low. Just going to drag that over because once the job figures comes out, it's going to spike one way or the other. We were down all last month, so this is just corrective back up inside the movement of trading last month, which was down. And yes, we have broken the low of last month, which is here. So at the moment, we've kind of retraced 50% of last month's move down in the start of this month. But you could be starting to monitor these fib levels of the 62 and the 79 over the next couple of days as well, if we spike higher. Because we might be just coming up at the moment to form the high point of the month before continuing the longer term move down. All right, so at the moment, on a lot of these pairs, I'm just waiting to see how yesterday's upward move transpires. Here we see a topping out process. Euro yen. Now, from the sell-off that we had mid to late March here, we rallied back up to this 79% level here. So that is a level to watch. And I'm not seeing anything to tell me it's reversing. If you want to be really aggressive, you could, look for a tight trend line break entry. Bit difficult to draw a trend line in here at the moment, but if we could draw a tight one in some form, as price maybe forms around that 79% level, if it did start to offer a reversal, you could look. It's worth noting, as we've been moving up to that 79% level today, we've moved above this high over here and this high over here. And intraday at the moment, that has become support. So you might see a failure at the 79% level, but any pullback at the moment may well just come back to support that we've tested as support. We've moved above two levels of resistance here, this level and this level today. You can see we moved above and it became support here. So if we do see some selling pressure down from that 79% level, you really need to get your risk out ahead of 164.41 because that could be support today. So depending on what side of the market you're on, this could be a sell level at 164.72 and a buy level down here at 164.41. So there's only 30 pips or so in between those two levels. Any pullback today could just be met by buying pressure back at 164.41. So that's the buy level to watch for a reversal back up. And I think over the next couple of days, though, from the 4-hour chart perspective, if we see 4-hour candles and structure starting to form at the 79% level here to maybe indicate a reversal, then of course that might be a level that you might want to start to look to short at or around for maybe a move back down the range. All right. What may instigate a movement down on the yen pairs is on the dollar yen. I'm just going to go to the daily chart. We'll come back to the dollar yen later, but just to let you know on the dollar yen, 152 up here, which to the weekly chart, which is the 22 high and the 23 high there. Both of those highs couldn't quite get to 152, so that level's been eagerly watched, I think, by the market and maybe by the BOJ, Bank of Japan. And maybe the Bank of Japan's already in here protecting 152 and they're just holding the market there. But if we get any spike above 152, we could well get some intervention, and that obviously will push other yen pairs down. So it's going to be interesting to see if this can continue up to a fresh high for this month above last month's high, or are we going to see some kind of failure here at the 79% area of that most recent sell-off down. All right, just won't spend too much time on the euro pound because it's very choppy, but it is maybe just holding just about an uptrend. Just on the weekly chart, it is forming here higher top. We've pulled back, and are we forming a higher bottom here? We won't know till next week, but if we have a week up next week, that's going to confirm it. And we've traded down, and then we're trading all the way back up. So it's just got the sniff of maybe a reversal. It's very choppy. Personally, I'd look at a different pair, but we have had a pullback to the 79% level. Tuesday, we were here, and I was saying watch 85.43 degree support, which it was. Now it's just trying to contend with these highs to the left here. So it's not in a great area to be buying. It's maybe in a good area to look for a sell today. It rejected down from that area yesterday. So it is struggling at this high, but the trend is up 85.75. So depending on if you like this pair, I think it's probably a better pair to look at. 85.75, move to the 15-minute chart. You could be watching 85.75 if we start to close back below there on a 15-minute chart. Then maybe you can look for a tight entry to trade back down the range in the short term. All right, pound dollar, much like the euro dollar, it's screamed up. Just looking at the day chart here. Monday we were down here. Tuesday we had a very small day, and was wanting to hold below this resistance level, but then the news spiked it up. So back up to the previous week's highs here. This is, go to the 4-hour chart. Now the overall trend is still down, but of course it's bounced up from support down here. And so, this could be long-term support to come all the way back up the range. Who knows? We'll have to wait and see. Last month, I just take all my lines off and put them back on. I've got a negative bias on this from last month, because last month we had a very negative rejection, traded down, finished with an inverted hammer. So we may well trade back up within the range, but are we going to actually trade further down long term? We'll have to wait and see. All right, let me get my lines back in. So of course we've come into a very strong support zone and had that bounce. Is it short-term support before moving further down? We'll have to wait and see. We could form some form of double top up here to then come back down. If today we form, a negative candle, then that may well be the key, to the idea that we may well then sell back down from this area. So dropping it down to, got maybe a few more lines to come in. So on the 4-hour chart, I have my last week's high here. We've just traded 1 or 2 pips above, and of course we're getting negative from that level. We've already traded down. That's the high of last week to the low of this week. That's the range we've been trading in last week to this week. And there's an area of old support here, which became resistance, a high formed there on a retest. So you can see why we could fail here and want to trade back down and fill the imbalance. Big imbalance here, like I was showing on the euro dollar. Now, of course, we can move higher, but we're maybe at the top of the range here. So if you can see a clear trend line break, are you happy enough to get short after such a strong move up yesterday? We could well move down to completely feel this imbalance. On the 15-minute chart, there's an imbalance down here as well. We could actually come all the way back down to 125.75 and just fill that whole area up. So you have to be prepared though to look for a setup to short if you want to trade back down for that fill. If we break above 126.67 up here convincingly, then let's go back to the 4-hour chart. At the moment, it's looking a little bit suspicious, like we might get a reversal here, but one of two things is obviously going to happen. We're either going to reverse, and if you see a setup to sell, you can sell to trade down. If we clearly move above 126.67 today, then on any pullback, you want to be watching that level for support intraday for a move back up the range. So if we do start to move further up the range, as I said before, we had a very negative candle last month. I will start to monitor the whole range of last month down to the low of this month that we've just put in, and start to monitor where we could come up to put in maybe the high for the month as a lower area to last month's high. Okay, so we could be putting in the high here. We'll have to wait and see. But any further negative news from the US, for sure, we're going to be moving up the range. So do we want to be buying or do we want to be selling? Now that we're back up to the top of the range. If we want to be buying, I think you at least need to allow this to come back down the range a little bit before, do you want to be buying at the high of the move? Probably not. So at the moment, there is the opportunity maybe to look for the short, depending on your viewpoint of how the news has been coming into the market over the last few days. You might want to stand aside and just wait for the US job figures to come out tomorrow, have your level set, and then see how the market reacts then. But of course, if this starts to go short, this could be back down to this area before the job figures tomorrow, and you've missed the opportunity to get maybe positioned to the short side. So you just have to make a decision. Do you want to engage before the job figures? All right, let's get into pound yen. Just on the weekly chart here, did have a very strong rejection up here on the weekly chart, and if we drop to the monthly, we are at very high levels. Trends are up though. Monthly trends up, weekly trends up. And the day trend is actually down at the moment. That's the lower bottom. Are we coming up? There's a very significant railroad tracks there that sold back below this level. I'm in two minds at the moment on these yen pairs, whether they're going to be able to come up and take out the high, or are they coming up to form a lower top? So certainly to the upside, any pullback at the moment, this area here, 191.31 should be support on a pullback. So on a 4-hour chart here, this is overextended. We'll pull back to this area. We'll look for that area to be support. There is rather an imbalance there, so you might have to really look at this range coming up, wait for a pullback to the 62.79% level if you're looking for a long. Do you want to be buying at the top of the move? Could be looking at a pullback to 191.31 for support. And then does it hold from this top over here? And that could be a good level to start to look for a reversal back up. If you're on the other side of the market, because as I say, we did have quite a significant railroad tracks here form. Are we coming up for a lower top? You could be monitoring, if you're more to the short side, with dollar yen. If the dollar yen continues to hold at 152 in the face of any positive US dollar news, then there is the question that we could see some intervention and sell-off of the dollar yen, which would translate into the yen getting stronger, and that would obviously potentially manifest itself in all the other yen pairs too. So there is a potential for a lower top to form. Today, we're actually testing the 62% level. So depending on your bias, are we coming up to form a lower top on the day charts? Is it holding at 62? I'm not really seeing the 4-hour chart show me any major reversal at the moment, but you could be monitoring the 4-hour chart here for some form of reversal. It could form a lower top on the day chart at 62, or you could be looking up here at 192.78 and then see if we can get some form of reversal. Now, comparing this pair to the Euro Yen on the 4-hour chart, we're at the 79% level of the move back up from the recent decline. So this has moved up a lot higher than what we're seeing on the pound yen because it's only at 62. So this isn't moving up with any, it's not moving up as strongly as the pound, as the Euro Yen. So, as we head into the Aussie yen, you'll see the Aussie yen's actually come up almost to test the high of last month. So some of these other yen pairs aren't quite as strong. The strongest one at the moment is the Aussie yen. So let's get into the Aussie yen. All right, we're at 114. We're almost testing last month's high. Last time we got up there, we had a significant sell-off. So once we got above 100 last time, got up to 116. We had a significant then corrective move down 200 pips. All right, so let's have a look where we are in relation to the monthly chart. We're in an uptrend, but we are at historical high levels. So, once we're getting into, you can see what happened here. Massive sell-off. Got back up here, sold off, here, sold down. So, all right, we're definitely in the area where the market considers this historically exceptionally high. All right, but we are still heading up. We're up, 2 pips away from last month's high at the moment. And the weekly trend is remaining up. We did have a nasty rejection. So, when you see a nasty rejection candle like that, that's telling you that that high area is being watched. So if you're not already long, it's very difficult to get long when you're trading into last month's high. Not seeing a signal to get short as we're looking at that day chart candle forming. But by the end of the day, if we see some form of, if that candle shows half a wick on it, or the next, maybe we close there today and then the next candle shows railroad tracks, then you may be, dealing with a double top up here, because that was a very nasty rejection there last time. We'll just have to wait and see how the day finishes. So at the moment, we're coming up, I think, while I'm talking, we may well test that high. So that high was at 116.5. So we're like 7 fractional pips away from testing it. All right, there's the 15-minute chart. Now, of course, this could be tested and we could see a significant reversal. Do you want to be buying at the high of the move? Probably not. In any form of being a buyer on a lot of these pairs that are overextended, you want to wait for some kind of pullback. So, and we don't have that today. So you'd have to wait for a pullback if you want. I think if you want to be a buyer, you don't want to be buying into last month's high. That's as high as we could go last month. Do you want to buy at that price? We could see this hold and reverse down. You can monitor that through the day. You could just be simply waiting for some form of trend line break here. Last time we're at this level, if we go back in time, let me just squash this in. This is where we were at last time. It didn't really give too much of a signal that it wanted to reverse down from the high that it put in. The key thing that should have been standing out to you when we were up here last time was the figure level here, which is 100. It's a very prominent number. So we traded above and then we just reversed straight back down. Never really gave you the opportunity too much to, may have been a minor trend line here. Just gave you a trend line break. So that was a swing point just, and that was there too. So there was a simple trend line break, and then we traded down over the course of time, 200 pips. Now, is it going to do the exact same thing for you? Did last time? Will it do it today? You can monitor it. You could just be monitoring here for a simple trend line break, which at the moment the trend line's kind of there. If you did that last time, it worked out just fine. Will it work out fine today? Well, you'll just have to monitor and decide if you want to take the trigger if it comes around. You could wait for a break below 100. So if this now starts to trade down and closes below 100, you could go, okay, that's a good enough trigger for me because it doesn't want to be above 100. And then, sell, putting your stop above this area. Or like you say, Ludovic, you could use the 100 entry technique. Sorry, the 100 pip entry technique. You could just be selling at the high here, put your stop 100 pips above on the basis that you don't think price can really commit above the level. Or if you want to wait for some weakness, if this was to start to want to, not hold at 100, you could sell at or very close to 100 with a 100 pip stop as well and do it that way, depending on whether you want to see some, at least some kind of reversal before you decide, okay, I want to pull the trigger and take a short. I mean, this could just go up another 100 pips at the moment as well. So it would be nice to see some kind of failure at last month's high. It's been very strong. All right, so you can decide if you want to go short up there or at least wait for some kind of, signal. One signal would be, if you want to wait for at least a little bit of clarity, is do we get a 4-hour candle rejection here? And then can you sell as close as you can on any intraday rally back up to 100? All right, at the moment, this is very overstretched. There's most definitely an imbalance. Once we broke out, we formed an imbalance here. Hasn't been filled. This imbalance here, I was thinking when price was kind of sideways in here that it may come up to fill this imbalance. So now we have an imbalance here. So we could hold here and come down to fill the imbalance. But you could wait for the 4-hour candle rejection. At least then you've got something rather than just shorting the top of an uptrend at the moment. All right. Aussie dollar. I'm using this range at the moment on my 4-hour chart. The last failure point from the day chart resistance area here. There's a range there. Now we're quite range bound. We're kind of stuck at 6621 as being resistance, even though we've been trading above it. And of course, we couldn't follow through below support this week, and we've just come all the way back up the range. Now we may hold at the 79% level, just filling an imbalance here on the 4-hour chart, or we may come up to the top of the range. And, if the range holds, then at the top of the range, then that's obviously a very clear area of resistance up here to look for maybe a move back down to the bottom of the range. So haven't quite touched where we've been up to. We've actually traded at 66. And I've been saying for weeks, we're kind of stuck between 65 and 66. So, if this is going to hold at 66 and start to move down, that would certainly help the Aussie yen hold its high point that it's testing. And it could see a failure up there at the 116 level. So again, you could be trading at 66 here, stop at 67, like you were saying, Ludovic, using a 100 pip stop. To be wrong, it would have to take out all this area here because 77 at the moment is up here. So price would have to take out all these highs for you to be wrong. A definite shift in the trend would need to occur for you to be wrong. So at the moment, you're at the 79% fib level here of this range. It's a 66 level. It's coming up to fill the imbalance that got formed here. There's just a little bit more of the imbalance just above. So maybe you can get up to 66.05 maybe. Is that the topping out level, or are we going to be coming up much more to the top of the range? So you could be waiting for a 4-hour. Of course, if you're going to wait, you could be waiting for a 4-hour rejection first of all to confirm. You're going to obviously not get in at the best feel if we are topping out at 66. You could be dropping down to the 15-minute chart and waiting for trendline break. All right, so we can all see that maybe we're at a technical level. You have to start to make a decision about how you maybe want to engage if you want to. Of course, we could still continue higher from yesterday's news push up, but it is a nice technical level to watch for a reversal back down the range. All right, let's get into New Zealand. We'll go to the New Zealand dollar first. This is at a very strong technical level. Go to the weekly chart. There's a weekly low here that we've broken below. Last month, we formed a little mini double top up here on the day, double top on the day chart. So this movement back up this week, is it going to hold at this weekly resistance level? So what we're definitely seeing at the moment is nobody knows if we're going higher at the moment, but we can see a number of pairs at resistance levels that could be the levels for selling. So New Zealand dollar is rolling back up to this weekly broken support. As well, there's a range here. We're at a 62% point. So that is, there's a number of factors just there that could see the market top out at that price point today. So you could actually monitor 4-hour rejection. You could monitor the 15-minute chart for a trend line break. There's actually been some form of, it's hard to draw a trend line up here, but there's been some form of trend line break in some kind of form already. But if you want a bit more, you can see we got above that level, but you can see now on the 15-minute chart, it doesn't want to trade above that. And on the current candle, it's starting to sell after touching 60.38. So you have to decide what's your setup, how much information do you need maybe to go short from this area. You could wait for a swing point break, so you could wait for this swing point to break and look to short the break of that, stop above the high. All right. Again, you could use the 100 pip method. So you're shorting it at all very close to 60.38 and you're putting your stop 100 pips above, giving the market room to maybe false break that area and you don't get stopped out. So you have to decide, do you want a tight entry or a much looser entry in regard to your stop? I would say we got further US news coming out later in the day, and it was, yesterday, for example, if I go back to the Aussie yen, yesterday, before the news came out, we were sitting at resistance here. Okay. At this high over here at 99, 199.05. And the market was sitting there. In fact, we go down the 15-minute chart, just getting a little bit of selling pressure up there at last month's high on the candle. Is yesterday, this was where we were before the news came out. We were just sitting underneath resistance. Nobody was prepared to be a buyer to take it above in any strong, buying pressure to move through. And then the news comes out and boom, we go above. All right, and it's going to be probably the same thing today. The market's now going to be sitting underneath resistance areas once more, and more news is coming out. And if it's very US dollar positive, then we're probably going to drop. But that drop will happen instantaneously, and you won't have the opportunity to get in. So, or the news could be positive, the news could be negative, and we could break higher. So it's very difficult at the moment around the news, and that just proves the point where we were sitting exactly yesterday on the Aussie yen. All right. So New Zealand dollar, are we going to move above 60.38 with conviction, or are we going to see a failure there over the next you know, maybe 24 hours. You can watch that. New Zealand yen. Now, if you go to the monthly chart, just to prove the point, we're just trading up inside last month's negative candle. You know, we came up just short of this high, 94.045. False broke this high over here at 92.40. I should put that one in. And we had a negative candle last month. So we're trading back up inside last month's negative candle. Are we going to be able to hold within that range and then further sell down this month, or are we moving higher? The weekly trend has actually put in some form of lower top here at the moment. That's actually last month's high. Day charts, there's a significant top to significant bottom. We're coming up, I am guessing, towards the 79% level. Are we going to see a fire up there at 79% level? I'm sure on the 4-hour chart, we're just filling an imbalance on this candle. So any imbalance within this candle now has probably just been getting filled. I mean, we might see this come up to 91.74, but in this area here, can we hold above, you know, this is very overextended. Can we hold above 91.51? If we can't, we're probably moving back down. That's the whole candle range of last month, which was negative. So this may well just be coming up to the 79% point to put in the high of the month, so the high for the candle, and then it could trade all the way back down for the rest of the month to put in the low of the candle. Assuming that, you know, we have a negative candle last month and we're going to put in another negative candle this month. So it is well worth watching just for some kind of reversal up here at between 91.51 and 91.74. All right, dollar Canadian. This is very range bound at the moment on the day charts. This is how I've got my range drawn in. Got a fib drawn across that range. So it's really stuck between 36.05 and 34.58 approximately there. So at the moment, can't short it from the top of the range anymore because we're moving down. I'll just watch the bottom of the range. What happens if we can get to the bottom of the range? So it would be a patience game at the moment on the dollar Canadian. What happens down at 134.58 or close to? Does it start to stop once more to move back up? So very range bound. So I trade it like it's in a range. I try not to engage in the middle of the range. Dollar franc. Some news came out before on the franc, which was CPI data. It's dropped, so that's dollar franc positive. In fact, it's zero, so they kind of got no inflation there in Switzerland. Now, at the moment, it's in a bit of an awkward area, as I was saying on Tuesday, just on the weekly chart. We're into a lot of weekly resistance over here on the left-hand side. So it's not an ideal area to just jump in and buy because you want enough room to be able to come up at least retest this area if you want to get into a trade. So at the moment that, you know, where price is, we're actually in the weekly resistance zone at the moment. So it isn't ideal to be a buyer. Yes, the trend's up. You can see yesterday we had a negative reversal from that level, but today we're up because the CPI data is now at zero. So that kind of leads the idea that maybe, yes, the dollar franc could go higher, but do you want to buy into resistance? So, and just, you know, putting aside the CPI data, had a nice rejection down from weekly resistance yesterday. We could just be coming up inside that candle of yesterday to then hold at that high to the left at 90.71. So this high here, last week's high. Maybe we're failing on a retest of that level there. That 4-hour trend is down. We could be, you know, failing in this area here. to move back down the range, but that data today is not positive for the Swiss side. So, and whilst we're coming up maybe into the 62.79% area here, we have on the pullback on the other range here. I said on Tuesday to watch this range. It was about here when I was talking, but if you extended the fib up, I was saying watch for a 62 to 79% pullback to watch this little base here of support. So this was really where you may be wanting to look for your buy, pulling back to this little base before we moved up for a move up to retest resistance. So, I would probably say more to the upside this pair at the moment, but we want to see a clear break above the weekly area. If we see another test of the weekly area and fail, then of course you could be looking to the short side. But that news coming out today is definitely favors the dollar franc to move up, because we had this spike up here was an interest rate cut from Switzerland. Then the data today said that the CPI, so inflation, is now at 0 month on month. If that next month goes to negative, that the fact that's moved from 0.3 to 0 would probably mean there's maybe another interest rate cut on the cards for the Swiss. Not sure what their interest rate is at, but data like that suggests maybe there's another cut coming. So maybe, as long as you can try to buy a dip on the dollar franc, it could be moving higher with that fundamental information. All right, dollar yen. I covered this briefly before. As I was saying before, as I was getting into the other yen pairs, this is kind of at the roof. And, like the like of the Aussie yen, where's that trading right now? Is the Aussie yen at the roof? Well, it's a couple of pips above last month's high at the moment, but it could, fall to where it's at. If the dollar yen is at the roof here and we get any intervention here, 152, those other yen pairs will follow suit to the downside. And so I think one of the job figures we had back last year, I could be wrong, it could have been a different data release, but there was one data release last year where following it looked like we got intervention from the Bank of Japan, because it put the dollar yen at a high price, and the Bank of Japan must have been watching and deciding that, well, if we move up any higher, we're just going to come in and intervene. So if the job figures does drive this above 152 on Friday, there's always the chance then we get a reaction from the Bank of Japan, because they're quite clearly, for 2 years now, this is into the third year, 152 is a roof. All right, they're clearly watching that. Whether it's the Bank of Japan or the actual market itself, all the participants in the market aren't prepared to push this above 152. So at the moment, it's rather sideways here in the day chart. We did sell off down from that area last week. We'll come back up to retest that area. So as I've been saying for the last couple of weeks, down here is really the buy zone, because we've moved above this. Squash this in. We moved above this area of resistance. So if we do move down in the short term, this is the buy zone, and we're quite clearly been testing up here, the sell zone. All right, and it's just sideways. So it is range bound at the moment. It could break higher, could break lower, but whilst it's staying range bound, you want to look to the outskirts. So up at the top, close as you can to 152 would be a good area to look for a short at the moment. And if we get back down towards 150.87, so I would say 151 down to 150.87, that's the area to look for the market to get support. If we break it down into a 50-minute chart at the moment, we obviously did sell down from retesting the 2022 high at 151.94. 151.90 is the 23 high. We could get driven up maybe to the 79% level today. I would be looking up here at the moment. If we come up, I would look at this area for the market to hold and reverse. And, on the other side of the market, wherever down here at 151 to 150.87 would be the buy side. All right, so look at the outskirts for the dollar yen. And of course, gold is moving higher. Difficult, if you're not already long gold, how can you be buying the top of the market? And there's no signal there to go short at the moment. So the rally is at the moment, we're in an uptrend for sure. And really, you could be looking to the 4-hour chart for a pullback on the 4-hour chart within the range. If you want to just trade these small ranges, look for a pullback to the 62%, 79% area. 2280 down to 2273. But I think the reality is on the day chart at the moment, as we're at a new fresh historical high, is we are overextended here. We're 2, 4, 5, 6, 7. We're the 8th day up. Yes, it can go up 10, 12, 14, 16 days if it wants to, but usually the market after so many days will pull back. So I would be, I would look for some kind of retracement. Could pull back to this high here at 22.63. That would be a good area of support to watch for. You just have to decide where to trade in the market, and do you want to be trading at the all-time high? Do you want to be buying at the all-time high? Probably not. Don't think you want to be shorting up there either, but I don't want to be buying up there either. You just want to look for the natural flow of the market. It's going to continue in a long-term uptrend. Then what we want to see is, it's in an uptrend. It's been in an uptrend. You want to look for the natural pullback, and as this turns around, look to engage in this area for the next leg up. So that could be in at around about the 22 area here. I mean, it may not pull back to that level because it is a long way above that level at the moment. It's almost, have we traded at, well, we've actually traded at 2305. So 23, we've hit 2300 now. So that's a definite price point for the market. We could see maybe a pullback, maybe down towards, 22 or 2200. So difficult to engage there where it's such high. We know where the trend is, but I think you just want to be looking for a pullback. All right, I'll wrap it up there. No more questions coming in at the moment. To see what the Aussie yen's doing. Is it moving substantially above that last month's high at the moment? All right, it's just hit today's projected high as well. So it's very much at or close to where it's going to put its high in for the day. Of course, it can keep moving up, but if you start to see price action showing a reversal, now that it's maybe done its range for the day as well. So today's projected low to high, it gives me the last 5 days ranges. So the last day chart ranges for the last 5 days added together, divided by 5, and then it projects it on my charts for me. So, we're doing the range for the average range for the last 5 days. As I'm talking, it's just moving up. But you can monitor that high. Do we reject that high today? At the moment, this moving above here is all stops going up off above this level. But can it continue above there, or is it going to reject? So you can monitor that. What's the Aussie doing? It must be at just getting above 66 at the moment. I'm not showing you that trend line break yet. And there's the pound. Pound's retesting last week's high at the moment. And the euro, it's just holding at last week's high, just a little bit underneath last week's high. So everything is quite overextended from yesterday's moves, and they're at high levels. Of course, they can move higher. So I'm going to be waiting for the US news to come out a little bit later and then see how the market reacts. I don't want to stay up too late, but if I start to see maybe a major rejection from these high levels on a pair that I like, I might look to get short on a pair. We'll just have to wait and see if we can start to maybe top out today or not. All right, so but nothing wrong with not being in the market as we're having these news items coming out at the moment. This unemployment claims coming out at 10:30 p.m. May give us an indication about what may come from the US job figures tomorrow. If this comes in, they're expecting 213. If claims are higher, that's going to affect the unemployment rate to grow. If claims are lower, we might expect the unemployment rate to drop, or at least the figures to be positive. So whatever this print is here, from last time to this time, there's not much difference there, but there's a significant difference when it comes out. That may give you an indication of what the job figures might do tomorrow. Of course, the market will react from that today as well. All right, so it doesn't matter if we can't get into the market for a setup, if we have to wait till Monday or Tuesday next week. It's important to understand that the market's definitely getting driven by news items. So we have one tonight, and definitely we have one tomorrow. So sometimes I'm just having to wait on the sides not to be in the middle of a news event. So we'll have to wait and see. All right, everybody. So enjoy the rest of the week for your trading. Stay safe in the market with these news events, and I look forward to seeing you next time. Thanks, everybody.